Gas prices hit $5 under President Biden with no conflict, no conflict that disrupted the flow of energy.
Cumulative Bidenflation went over 20%. Unless this war lasts another year, it's still highly unlikely that we're going to get a big inflation shock that sticks.
We had gasoline prices below $3 a gallon, and we'll again have gasoline prices below $3 a gallon.
But we're not going to get a big permanent inflation jump simply because the M2 money supply, which is the ultimate inflationary cause, is growing only around 3.5%, and it's well below its historical trend.
The oil price fell a bit, and the markets reacted as well to the president saying, we're going to hold off, at least for 5 days, on hitting these energy infrastructures inside Iran.
But to fix this long-term, decades-long problem with Iran, we're all going to have to suffer a little pain. But there's all sorts of things we are doing to mitigate that.
Today's S&P Global Composite remained in growth territory above 50 on the index. Manufacturing actually went up along with new orders. Input prices did go up, too, as the temporary effects of near $100 oil are being felt, even if it's only for a short duration.
Oil traders, they're looking for the Strait of Hormuz to reopen. That's what they're looking for. So what happens, Jackie, if there is no deal in 5 days?
This is week 4 of a war that was promised to be 4 or 5 weeks. And the markets are getting a little antsy. You see that volatility, especially on the equity side and also in oil. But that drop on Sunday night from $99 a barrel for West Texas to $88 shows you just how much speculation is driving this market now. We could be substantially higher if we did not have the supplies that we had here in the United States due to President Trump and his energy policy.
The post-war American economy is going to flourish, and that's the subject of the riff. It may not be great, but the U.S. economy right now continues to expand, even with war-related energy prices spiking and a certain amount of anxiety in the air. I don't deny it. Productivity continues to surge, trending around 2.5%. We're in the throes of an AI, quantum computing, high-tech revolution that's going to drive our economy for many, many years. Labor markets may not be booming. Weekly unemployment claims, meanwhile, are at rock bottom. The unemployment rate's 4.4%. But business is in a capital investment boom. Factory construction is roaring. Wages still running ahead of prices. Consumers are still spending. Consumer tax rebates and tax cuts appear to be offsetting the temporary tax hike effect of war-related gasoline spikes.
By Brokers Connection.